Hi guys, welcome to today's post-market analysis video. I'm going to show you post-market analysis of the 6th of December onwards. On the 3rd of December, Nifty had fallen nearly 300 points. So it was a big fall. This was the high and this was the low. So this fall was 300 points, and the next day, that is the 6th, opened with a strong bearish candle, which again indicated that there would be selling on that day also. In fact, the candle had already broken the previous day low. It started to fall, and this was the level which was the demand zone that was marked from the December 1st, 2021. So let's scroll back a little bit. I'll show you what had happened on December 1st. So this was December 1st. See how price action is here. This was the low of December 1st. It was the 215 candle that took support, made a pin bar, and then there was another bounce. And from there you can see that price bounced up to the level of 1704.88. So that bounce, if you check the price range, was 423 points. The level of around 17,080 is an important level, so you should mark it as a demand zone, and you should observe price action when price comes to that level again. So price returned to that level on the 6th of December, and you can see the price action that happened around that area on that day. So this is how price reacts whenever you see a demand zone or a supply zone. Now this was a demand zone, so price tried to break it here at this level. After it tried to break it, it consolidated for a while, and then finally it broke down. Such levels should always be marked. They are important levels, and they act as strong support and resistances when price comes to that level again. On the 7th of December, which are the important levels that come from the 6th? One is the Virgin CPR. So this level here is the CPR of the 6th. So if you see, this level was never touched, and on a day when the CPR is not touched, it is called a Virgin CPR. So what does it mean by not touched? It means that price does not enter inside the CPR the entire trading session. So price did not enter this CPR for the entire trading session on the 6th of December, and so this CPR is a Virgin CPR. Virgin CPR acts as powerful support if price comes from top, and as a powerful resistance if price comes from the bottom. And another important level that should be marked on for the 7th is the day high of the previous day, that is the 6th. So as you can see, the day high here of the 6th was open is equal to high. So open is equal to high levels are very important, so you should always mark those areas like so, and you can see how price reacted. It went to the Virgin CPR, which is this area here, and then at this level it took resistance and fell. So this is how you should learn to mark levels on a day prior. Now, are there any important levels for that the 7th of December had formed for the next trading sessions? Yes, there is an important level here. The high of this candle is important, and when price broke this high, it had given this big move upwards. So this point is the breakout line, and you should always mark this line for upcoming days, this being the breakout line. So moving ahead to the 8th of December, which are the important levels here? From the 7th, we've already marked these levels. This level is the 17,079.50 level, and we've also marked the 17,056.30 level. On the 8th of December, price opened, and it opened outside the previous day's range, and it formed this border, which is called the gap border. So you should mark the gap border, which is the border between the previous day close and the next day open or the next day low. So the high of the previous day and the low of the next day. So it formed a gap border, and this gap border is very important because whenever price comes to this level again, it will act as, either it will act as a support if price comes from the top, or it will act as a resistance if price comes from the bottom. This becomes a demand zone where the price had bounced. So you should maintain that area also as a strong support. On the 9th of December, it made these three strong red candles, but this was the CPR. Let me draw it out for you. This is the CPR, and as I've always said, whenever you see price approaching CPR, you should always be very careful because CPR will most often act as a strong support to price, and this is a wide CPR, it's not a very narrow one. So price approached CPR, took a bounce, it fell again, it tried to break the bottom central pivot, but it could not break it convincingly, and then again bounced, went to the day's high again, and then from there again it reversed and it went sideways. The entire day it was a range bound day with not much trend in the during the 9th of December. Moving ahead to the 10th of December, price again opened with this pin bar, but this was a red bodied candle, yet it had a long wick on the bottom suggesting that there are buyers in that candle. So you should always make sure that you don't short such candles. This wick suggests that there are buyers, and then as you can see, price again was caught in a range the entire day. It did not really go anywhere, and it kept trading around the CPR. So CPR is like a magnet, it will keep pulling the price towards itself from wherever price is. So you should always plot CPR on your charts. In my trading, CPR is the most important level for me, and I take most of my trading decisions based on CPR. The 17,079 level, which is this level right here, you can see the one that I'm circling, and the next level you can see is the 17,056.30, around that level. So you should mark these levels and keep them ready for the next trading sessions. So how do you find out important levels historically? Have a clean chart in front of you, go to the 1 hour time frame. Here you have to mark any important levels from where price had fallen severely. So one level you can immediately see is the high of this candle, which is the 18,210.15 level. So this area you should mark as an important supply zone. This level will act as a strong resistance, and so you have to observe price action and only then initiate trades. Another important level that we can see here is this level right here, which is the level of 17,539.90, so around 17,540. Mark this level. Why is this level important? Because you see price action, you see price breaking the level as a support here, then price taking resistance at that level, again taking resistance at that level, around that level again price took resistance, and again on the previous trading session, that is the last trading session, price has taken resistance at that level. Another important level is the level of around 16,994. This level is important because you can see price taking support, strong support at this level here multiple times. Price broke down, but then there was no follow-up and price bounced again from that level. So this level is important, and the rest of it you can just put it in a zone. You can make a zone around it and just make a box around it, and you can give it a nice color. So next time whenever price approaches that level, you will know that you're supposed to be watchful at that level. Do not initiate the short trade unless this level is broken. Another important level you can mark on the chart is a lot of price action around that level. You can see price taking support here, this pin bar forming here, then again it took support, again it took support, and then the price broke it, then it took resistance and fell from there. So this level in the future will act as an important resistance if price approaches it from the bottom. So the level being around 17,806.3. So mark that level out and be watchful whenever price approaches that level. Also mark a ray around 18,605.50. This makes it easier for you to mark levels instead of marking levels on the 5-minute chart. Whenever you are marking levels for historic price action, you should always look at the 30 minutes or the 1 hour time frame. So that is it guys for the analysis of Nifty. Please do like and comment about the video and also subscribe to my channel, and please share this video as much as you can so new traders can learn a lot from my videos. I keep posting videos as often as possible so that everybody can learn from it, and my intention is to make sure that I can spread knowledge and I can teach you guys as much as it is in my capacity, and so I can help you to learn and earn through trading. Thank you and see you in the next one.